Good morning, ladies and gentlemen. This is Clueless 8, and this is Wednesday, May 27th, 2015. Looking at the calendar, not that we need to look into it, we have Thursday, well, today, tomorrow, and Friday for the end of the month window dressing rush, which I still believe is going to commence at any given moment starting from today's market open. I mean, the timeline starts countdown from today's market open. At what exact point we're going to see a snapback rally, as I'm going to show you very clearly here on the S&P E-minis, where I'm seeing some pattern symmetries, which is one possible scenario. I can't tell you exactly at what point that's going to trigger off, and we have a sharp move up on the markets to retrace some of the drop that we incurred on Tuesday, yesterday. Sometimes it happens overnight, and so you must always have a small position that you need to carry. And at this point, I believe the risk is to the upside rather than the downside. Let's take a look at this chart that you have behind you. Now keep in mind, and this is specifically for newer members who are starting to understand the way my clueless brain works, and overall my forecasts have been dead right, and I will take credit for that, overall on the markets and on many individual stocks. Pattern symmetry recognition or pattern recognition is a form of technical art. Okay, pattern symmetry and pattern recognition is a form of technical art. One of the key things that I teach my members in the advanced coaching sessions is that technical analysis on its own does not deliver the goods. You have to mix in with within the context of what's happening in the outside space. That's the global markets, the domestic markets on the economic front, and everything put in together in a bowl, and then you decide, and then you make a decision as to what's going on. So, from a pattern recognition standpoint, you have to keep in mind that patterns don't just invent themselves. These are human behavioral emotions in the form of pictures, okay, in the form of shapes. That's really what it is. Fear, okay, greed, fear, greed, and that's it. That's really what it is. And that manifests itself in the form of all these technical moves and all these tea leaves that we try to read. Now, saying all that, and I repeat, and this is specifically for the newer members, the advent and involvement of heavy involvement, I should say, of algorithmic high-frequency trading programs in the market, known as algo HFT bots or robots, that dominate almost at any given time 70 to 90% of daily trading in the market, and the whipsaws and the volatility, and you name it. These algo HFT bots don't give two hoots about human emotion. They hunt out clusters of stops, they hunt out clusters of sell limits, you name it. And they are in the business of keeping you off the boat or the ship before it takes off, or get you in the ship as much as it can before it goes down. So therein lies my branding and my service, where I try to pinpoint the levels which I think you can maximize your profits. Simple. All right, so let's take a very close look at this pattern symmetry of the E-mini index futures. Pre-market up 3 points means nothing. What I'm looking at is a pattern. And if I feel, and given the backdrop of where we are right now, the end of the month window dressing, which I've explained many times, is a very common occurrence where portfolio managers add high beta names, momentum names into their portfolios to juice up their returns, or known as, to generate alpha or excess returns, so their portfolios look good. We literally have 72 hours for that, and of course they've been doing it through and through, but still, it's the last showcase that happens in the last couple of days of the month. We've seen that happen a lot of times. So based on that, and based on the fact that We're up 1%, 2%, that type of figure on the overall markets. We're certainly not overbought from a return standpoint. This is what I see happening. So here you have a pattern. Let me get my drawing tool. And this is very important because within the context of this, you can make a lot of money on some of the stocks that we trade, period. That's really what it matters. Now, another very important thing to keep in mind is that, by the way, keep focusing on this pattern as I'm doing this short commentary. This one, okay? And whether it's going to repeat itself. This one is the fact that at this juncture in the market, we are in a topping process. I've said that in June we will have that's my belief, a powerful correction in the range of 4 to 6 to 8%, maybe 10%. I don't know. The bottom line is that you need to keep your trade sizes small. My new mantra, which I think everyone should follow and has been for many months, is play small, win big. Play small, win big. Buy those calls cheap and then sell them up 200-300%. We've been doing it consistently. Don't play big and lose big, because at this juncture in the market, these algos are vicious. They'll come from nowhere and just decimate you, whether on the long side or the short side. Period. And that's the reason for this type of choppiness. Okay? Period. So when you get this type of chop behavior, you are I don't care how good you are, you'll never be able to navigate these type of things. And I'm pretty damn good at pinpointing inflection points to buy in, and you get these type of moves up. Okay, hit some resistance, these type of moves down. See how symmetrical they are if you look back in hindsight. So at this point, what we're seeing here is what I'm seeing here. Let me take another line here to. Okay. So what I'm seeing here is this pattern we're looking at could be replicated. So we could move up. We didn't come down here. We held this level. Well, close enough. That's the Darvas box here you're looking at, the red and the green lines. So if this pattern repeats itself, then there is a good possibility this move down here is this move down here. Okay, and then you get to move up. So you get to move up. Let's say we get up to the top of the Darvas at 2119. Then we move down, check the lower end of this channel, this blue line, and that would be this. And then you make a move up that basically goes and tests the the 2140 level, or at least the previous highs. Next time it hit the previous highs, I can assure you it's going to break through and hit 2140. That's the top of the rising wedge that I keep on talking about. And I think that will happen before we have the nice, juicy tradable top for the correction. So let me repeat again. This move down is very similar to this move down. This move up is the one that's shaping up right now. That goes up to about 2119 on the E-mini, roughly about 2125, 2126 on the S&P 500. Okay, so then you get a little pullback. You get a little pullback. That tests the lower end of this channel. Remember, this is the channel. This is the consolidation flag that broke down here yesterday. Our SPY puts were up about 60-65%. I was scaling out along the way, but those are great hedges to play. So it'll come down, it'll test this lower end, try to stay within the channel. If it doesn't, then all bets are off. Then we're going to fall hard and we're going to come down to 2080. We break 2080, we're going to come to 2055. That comes to about 20. Add 6 or 7 points to the E-minis to arrive at the S&P figure. So you're looking at about, you name it, 2062. 2062 on the S&P would be this whole corrective phase. So, okay, let's stick to the. So that's the bearish count. The bullish count is we come down, we test the bottom of the channel here, and then we move from here. Okay, go to the top of the channel, big vicious move, and that would be something like this. Okay, probably up here, pull back a little bit like it did here. So it does pull back like that, and then make a move here. So again, that's the bullish scenario. I'm not very important here. Again, specifically for newer members who are listening to this, trading and investing, but trading specifically over shorter time frame is a high game of probabilities. What is the highest level of probability that you are measuring based on your estimation of what's going on? I just provide the tools which have worked for me very well. That's the reason why there are 21,000 plus people following on StockTwits, looking at my charts and hopefully benefiting from them. Okay, and a good number of people here in on our very young 1 year old subscription website. So I'm providing you some very precise tools. I'm providing you with a unorthodox, unique way of looking at things, where whether it's behavioral game theory, whether it's predictive game theory, whether it's pattern recognition mixed in with global macroeconomics that I throw in, good dollops of that I throw into the mix. Read my Twitter feed. Every single article in there is worth money in your pocket, in my opinion, because your brain is the biggest ATM machine that you have. Just remember that. Start thinking for yourself, or else you're like that one-legged man in an ass-kicking contest getting your butt kicked. I read that the other day and I tweeted that, right? So start thinking for yourself. Start thinking, employing my tools, and you'll be a winner. No questions asked. Now, keep in mind, so here's the pattern, I repeat. So we have a zigzag move here. So we dropped here hard, move up here, possibly move up to a 21.19, come down, move up here, little consolidation, and a move up here, and that completes the. At this point, traders are uber excited, a little bit too much euphoria for my liking, and that's when you short because it's a rising wedge. This was rising wedge, it fell apart. So this is the top of the rising wedge. This will fall too, and we'll see what happens after that. That's it. Now, here's the marketing plug. Every single member who has taken the advanced coaching session, the chart analysis part that I'm talking about with myself, knows a lot of tricks on how to navigate these markets, and they will tell you themselves that they feel far more confident and courageous when they see the markets down 100, 200, 300 points, and they know what to do when the markets are up 200, 300 points. Nothing is learned in one day. It took me years, and I'm still learning. So highly suggested that you read the testimonials, sign into the group coaching sessions, see for yourself what will benefit you and how you can navigate the markets better. It's also a selfish reason why I do it, and I've said this to other people very openly. It makes my life simpler, because as I'm going out there drawing these charts and showing all these patterns, the reality is that I don't have to explain every single minute details if I have an educated member, period. Now, going back to it, E-minis are right now bumping heads right here on this channel. This consolidation, this was the large consolidation channel that broke down yesterday here. So we're back testing it. A push up into it will move up to the top of the Darvas box. That's around 21.19. Comes to about 21.27 on the S&P 500. We'll see what happens after that. My gut tells me they're going to pull a heavy duty move up. I'm not sure if it's today, but going into tomorrow and Friday, probably get to the top of this channel. We'll see what happens after that. Thank you for listening. Let's connect on the Twitter real-time feed, especially for new members. Follow that closely. You can put the mobile notifications on your Twitter feed so you can get that on your mobile. And any questions you have, feel free to ask us, engage in the chat room, send emails to send an email or two for any technical questions at support at clueless8.com, and welcome. Thank you for listening.